We're talking about trading using channels today with our guest Al Brooks. Now, Al, you do have some thoughts about when to buy and when to sell when you're using channels. Tell us about that.
Right. I view the market as either being in a strong trend or in a trading range. And a channel is a weak trend, which is a transition between a strong trend and a trading range. So we have a breakout from a trading range, a strong trend, a spike, and then you start to get overlapping bars, small pullbacks. That's the channel phase. And over time, it evolves into a trading range and trades back down to, if we're talking about a bull channel, it trades back down to the bottom of the channel.
Now let's talk about where to buy. I also want to talk about where to short, but let's talk about where to buy. Is a price ever too high within a channel that it becomes dangerous to buy?
Yeah, that absolutely is the case. A channel is a transition, and if the channel is very steep and vertical with very little overlap between the bars, it's essentially behaving more like a very strong bull trend. And when that's the case, you can buy at any point and you manage it like a strong bull trend. When it starts to get deeper pullbacks and bigger swings, it's behaving more like a trading range, and you can start to take trades in both directions, and it's usually better to trade it like a trading range, looking to buy low, sell high, and scalp.
So how about shorting? When is the best point at which to do that?
I would only consider, if we're talking about a bull channel, I would only consider shorting it once it has clear evidence that it is transitioning into a trading range. In other words, I need to see the market go at least sideways for 4 or 5 bars and break to a new high and then form some kind of minor reversal. And since it's still a bull trend, I'm only looking to scalp. So any short in a channel is only a scalp.
Let's talk about using stops, because obviously that's one of the most important elements of a trader's strategy. How do you use stops when you are trading channels like this?
It depends on your objective. If the channel is still very steep and very strong, I'm looking to swing trade, and unfortunately that means your stop goes below the most recent high or low, which can be far down. So if your risk is far greater than what you normally want, you have to trade much smaller. If the channel is starting to transition more into a two-sided market and you're looking to scalp, your stop is going to be much tighter, but your profit objective is also going to be a lot smaller.
Now, you were alluding to breakouts a moment ago. Talk about how your trading might change if a stock breaks out to the top, say.
It depends. I assess the strength of the breakout. For example, if it's 1 bar and it's exceptionally large and it closes near its high, the market probably will have follow-through, so I could buy the close of the bar. If the next bar also has a bull body, the odds of follow-through on the next several bars is probably 70% or more. So again, I can buy the close and use a stop below the bottom of the spike. On the other hand, if the breakout bar has a big tail and it closes down near the middle and the range is not too big, I'll wait before I buy. There's a higher chance that that breakout will fail.
Well, very valuable insights today, Al. Thank you so much.
You're welcome.
This is the MoneyShow.com Video Network.